Good morning, everybody. Hey, happy Valentine's Day. Hope you're doing well today as we head into the weekend. A great day on Wall Street yesterday. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in the world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk that you have in that portfolio and making sure that it lines up with the amount of risk you should have based on your current circumstances, how close you are to retirement, and those type of things. And again, that's why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. We got Dave coming up next.
5.7 Light FM. My headphones went south on me for a second there. There we go. It's 8:42 here, 18 now before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
So there, 8:42. It's time to check in and find out where your money is going this morning, and that means we get help from Phillip Statler from Statler Financial Services with his offices in downtown Sebring. Phillip, good morning. How are you, sir?
Hey, good morning. I'm doing well. Happy Valentine's Day to everybody out there, and hope your week has gone well and your weekend will be better.
Yeah, basically off of yesterday, we kind of got a Valentine's Day card out of the markets. I mean, after we started out with a producer price index number yesterday that just kind of confirmed inflation is not where we want it to be, everybody said, "Oh, heck with it. We've already got things adjusted." And Dow went up 343 points. Standard & Poor's bumping its nose on another record, up 63. NASDAQ up 296, up to 19,945. If we can actually pull it out today, the NASDAQ could cross back over 20. Boy, you can't tell there's any problems in the world whatsoever looking at yesterday's action, can you?
No, you can't, Dave, and you got to throw in the Russell because it did well too. It was up almost 1.2%, $26 yesterday. So
Uh,
everything had a great day yesterday.
And it was kind of confusing because you and I looked at the PPI, the wholesale inflation yesterday, and kind of said, well, this confirms inflation's a problem. We expected a reaction an awful lot like the consumer price index the day before. And everybody said, okay, we knew that. And then it just kept on going, which brings us up to the retail sales today, which isn't necessarily an inflation indicator, but it does indicate what the consumer's attitude is. And we expected to have a little bit of a rise. We ended up going down in January, 0.9%, which kind of makes me go, what?
Yeah, and that's a big swing from December, right? December retail sales were up 0.7%, and now we're down 0.9%. That's a pretty big swing, month over month. And I know December's a big month for Christmas shopping, that kind of stuff, but still, that's just a big, January, everything goes on sale. Everybody's trying to
Yeah.
clear out their inventory. So that's, a little disturbing there that we dropped that much.
Absolutely, and I'm thinking about the notion that this is seasonally adjusted junk too. So they already correct for that stuff in the process of reporting the numbers. So that's not good news. And once again, a little bit like yesterday, I expected the market to respond negatively to it. And you're saying basically, well, a little off, but still shrugging their shoulders more than anything else off of it. I'm gathering.
Yeah. I mean, we've been in red ink all morning, and so it did not drop anymore. It just kind of wandered down. It's wandered back up a little bit, but
Mm-hmm.
still definitely red.
Kind of strange. Dovetails off of a couple of things that I got this morning on the reports that are out too. Bank of America issued some data on their credit and debit card activity, and they're kind of guessing over there that a whole bunch of consumers anticipated a bunch of price bumps off of imposing tariffs and bought a bunch of junk early as soon as the election was over, and then ended up deciding to, well, we don't need to buy any more because we've already front-loaded ourselves trying to beat the tariff price increases. I wonder if that was becoming conventional wisdom.
I mean, I guess that could have been an issue at that point because you're right. I mean, it was pretty much forecasted that we were going to see tariffs, And
Hmm.
if something you wanted to buy was being imported and it was going to have a tariff on it, well, then it made sense to go ahead and buy it before the tariff hit.
It could very well be it. The other thing, talking about front-loading purchases, the government's been doing it too. A report comes out yesterday afternoon, and again, I looked at the charts and I was kind of surprised by this. 2 o'clock yesterday afternoon, we got the ongoing budget report out of the government. Our budget deficit on a rolling average basis is nearly 30% up year over year on a rolling annual basis, $128 billion during the month of January. Nearly 30% increase in spending year over year. A whole pile of that is stuff for the outgoing administration, spending every single bit of money they humanly could before the changeover in administrations. But, if we're going to try to control the deficit, I think president's going to have to probably, maybe buy Musk a bigger meat cleaver.
Yeah, I know. I did see, though, I thought this was kind of interesting. I did see that the House was able to strike a deal to cut 1.5 trillion from the budget. Um, and so they say that's kind of paving the way for Trump's legislative agenda. So, if the Republicans can get that through their House, and then the Senate can get it through theirs, and that might be some more cutting there.
I was reading, too, that's not a long way off what the Senate version of the bill is, too, so it actually has a chance of passing. One more inflation indicator we got out. You found this morning before I could, the import price index month over month. I'm talking about another inflation reading, up 0.3%. Granted, they were expecting it, but it just kind of confirms that 3% inflation rate that we're dealing with, doesn't it?
It does. It definitely does. And that's, that's before. If you add tariffs to that, next time it'll be up even higher.
I've been saying all along, I'm really not as scared of tariffs, especially not on China, as others are. I mean, the Chinese are masters at manipulating their currency. If we slap a 10% tariff on them, they'll simply make sure the yuan goes down by 10%. They'll absorb the tariff, and we'll all shrug. I have no grandiose concerns about the Chinese tariffs, and I mean, I've been proven wrong in the past. But given the fact that that country is so darn good at manipulating their currency, I would be shocked if anything major happened on that front with Chinese import prices. Now, Canada and Mexico, different story, but I'm kind of cynical maybe, or maybe just optimistic. The other tidbits out there in the process. If you like eggs, we don't like the price of them. Now coffee is going through the roof as well. I live without eggs, but by gosh, don't take my coffee away from me or raise its price through the roof.
Yeah, I'm right there with you, Dave. Got to have my coffee.
It's my drug of choice, and I don't want to lose my caffeine. So just to keep us all in the loop, now they're going to have to start putting coffee into the list of things they delete for the core consumer price index, or we're going to end up blaming a big increase in inflation on the price of coffee. Can you give me some good news as far as financial reports out this morning? I'm getting crabby.
Well, it's kind of a mixed bag this morning, Dave. I'm having a hard time finding a couple, but hey, let's start off with some positives, and we can end with the negatives.
Okay.
So we had Roku reported, and they better than expected results. They only lost 24 cents a share instead of 40, which I guess that's good news. Revenue was slightly ahead of expectations as well. So we got Roku just kind of burning it up this morning, up 13.8% before we get going.
Cool. All because they didn't lose as much as they expected to.
That's right. That seems to be a case on several today. Then we had Airbnb. They also beat their top and bottom line in the fourth quarter pretty substantially. They came in at like 73 cents a share versus 58. Revenue was slightly above expectations, but they're getting a nice little pop this morning too, up 13.5%. So we did find a few here and there that were heading up, but we've got more that are tumbling than are climbing up the stairs there. So we've got Moderna reported a wider loss than expected. And so that's not good news for them as we head into the day. It's down almost getting close to 5% now.
That actually is smaller than I expected, with RFK getting confirmed as the HHS secretary as well. He's no great friend of the products that Moderna makes either.
No, no. There's a company called Informatic. Now they're a cloud data management company. And they came out and issued some grim forecasts for the current quarter, and revised their full year guidance below expectations. So they are getting clobbered this morning, down 32.6% this morning.
Boy, that's a buzzword industry to be in right now. You don't fall when you're in cloud data management these days,
No,
do you?
no, you don't. That means you're losing the war. Um,
Absolutely.
Applied Materials,
Hmm.
semiconductor company, they had provided softer than anticipated outlooks for their revenue and their quarterly numbers, even though they beat expectations for the quarter. They're down 5%. It seems to be a theme. Palo Alto Networks, same. They missed on their free cash flow, even though they topped estimates for their earnings and revenue. They're trading down 3.6% this morning. Another company that is, if you're a dialysis patient, it's a household name, DaVita.
Hmm.
Their big dialysis provider. They uh, they came in and changed or made some adjustments to their annual numbers, and then you got even Berkshire Hathaway has offloaded some of their shares, and so that's got them getting beat up. They're down 9.6% this morning.
Right. Yeah, with all of the checkered numbers that you got this morning, it still needs to be mentioned that 48% of the reports that we've gotten in have beat the S&P 500 so far. So by and large, today being the exception, it's been a pretty good earnings season so far. But today's kind of a blemish on the face of an already good earnings season, I guess, isn't it?
Well, it is, and well, let's face it, we only get the highlights. There's a lot of
Hmm.
companies that we don't talk about that are reporting. So those companies, if they're in line or slightly above, they don't necessarily, if they're not some big newsworthy thing, then they don't get, they don't hit the highlights.
Very fairly put. Resetting the table, it was Green Day yesterday on Wall Street, and even the VIX got down into something resembling tame territory. 45 minutes before the markets opened this morning, we kind of alluded to it. How much red ink have we got? I'm not seeing a lot of my delayed futures anyway.
No, and it's getting better as we speak. The Dow right now is down less than 0.2%, $78. S&P 500 is almost flat, down to $1.70, and the Nasdaq 100 is basically flat as well, down $3. The Russell 2000 is actually bucking the trend. They're up 0.25% this morning before we get going. On the other side of the coin, we are seeing silver off of its high today because it was up over 4% earlier, but it's up 3.2% right now to $33.77. Earlier, it was up over 34. So it's pretty volatile this morning. The gold is actually down right now, about 0.2%, and crude oil is up 0.5% to $71.66 a barrel.
I'd take a little bit of wobble on that, long as it stays under 72. I kind of like what the jawboning has done to the price of oil lately. Going overseas, the Asian Rim market was pretty much up. Mainland Chinese markets were up 1.1% and 0.5% at the close this morning, and that pretty much dragged the Asian Rim upward. Europe is literally all over the place today. I've got some down, some up, third of a percent down, third of a percent up. I got no trend on balance. The average European index is off just fractionally, about halfway through their trading day, by maybe an average of around 0.1%. But there's no direction whatsoever. Everybody's going in opposite directions over there. Trying to get my retirement on track so I can actually plan to retire someday. That takes a pair of eyes I ain't got on me. How do I find you to use your eyes, Phillip?
That's why I created the Core Retirement Design to help people design that retirement they've been dreaming of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we'll be back here again on Monday morning. I'll see you next week, and you have a wonderful weekend, sir.
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great weekend, and I will talk to you again next week. Take care. Bye now.